Right. Good evening. Welcome to this meeting of the Audit Committee. For the benefit of those watching on our YouTube channel, members of the committee are present in the chamber, and these members will be voting on proposals this evening. Other members of the council are also in attendance and/or participating via MS Teams and can take part in any discussions, ask questions, but cannot vote. Your attention is drawn to agenda item 1, which sets out the guidance on how meetings will be conducted, including the ground rules. Before we start the formal business, we will confirm attendance of voting members by doing a roll call. You, Victor.
Thank you. Councillor Cannon.
I'm present.
Councillor Lark.
Present.
Councillor Bishop.
Present.
Councillor Clokey.
Present.
Apologies been received from Councillor Hood is participating via MS Teams. Councillor Parry.
Present.
And Councillor Rhodes. Apologies been received. Councillor Rhodes participating via MS Teams. Thank you.
The other councillors in attendance this evening, either in the chamber or via MS Teams, will be asked to introduce themselves if invited to speak. Democratic Services officers have noted which other councillors are present, and their attendance will be entered into the minutes. Can I just ask the officers present in the chamber to introduce themselves?
Good evening, everybody. Paul Worden, Head of Finance.
Good evening, everyone. Donna Riley, Principal Accountant.
Good evening, Amanda Riley, Principal Accountant.
Good evening, Karen Herbert, Deputy Internal Audit Manager, Lead Audit for TNBC.
Good evening, Debbie Chisman, Audit Manager for KCC, supporting Karen Herbert.
There are also some officers attending online. Would they like to introduce themselves?
I am Sian Hedger, I'm Deputy Section 151.
Good evening, everybody. It's Damien Roberts, Tunbridge and Moorings Chief Executive.
Thank you. And we also have the support of Victoria Freeman, Democratic Services Officer, to take the meeting this evening. I think we've heard there's no apologies. Well, there are some apologies, but they're attending online. So no substitute members are present. I will formally ask, are there any declarations of interest? No. Item 5 minutes. I'll ask can I confirm the notes of the meeting held on 21st of July 2025? Can I confirm that as a correct record? Thank you. Right, on to item 6, and that's the Treasury Management Performance Update and Mid-Year Review for 2025-26, and that is presented by Donna Riley.
Thank you, Chair. Good evening again, everyone. The Treasury report being presented this evening is set out on page 21 to 44 of the report pack. It provides an update on the current investment position to July 2025, the property funds, and a mid-year review of the Treasury Management Risk. Going straight into section 5, the performance to the 31st of July. On page 24 of the pack, you will find table 1. This provides a summary of the investments held at the end of July, which total £61.12 million. This has generated income to the council of 927,000, resulting in a favourable variance of 127,000 against the original budget. The main drivers for the increased income remains bank rate stability. So the bank rate has been slower to reduce than we anticipated. It's currently sitting at 4% and has been doing so since August. The MPC meeting on the 18th of September held the bank rate at 4% with a 7-to-2 split. The markets, previously they were looking for a rate cut in December. That's been reduced to about 22% now, and the markets are now forecasting that we may not get the next cut until June 26. Market volatility remains one of the key drivers. So the markets are continuing to react to prevailing conditions such as the labour, the geopolitical risks that we have currently, and inflation, which is nearly double the target. And of course, money market performance, they are still offering rates in line with the bank rate. Moving to 5.16, Table 2 on page 25 of the sets out the sales value for the LAPF and the Hermes funds. I will come back to these shortly. It shows a net benefit since inception of the funds of 530,000 as at the end of July. Please note that is the sales value. If we can focus on the property funds, on 5.21, an update on the Lothbury Property Fund can be found on page 26 of the pack. The council to date has received 6 payments. These total 1.324 million in respect of our initial investment. There are 4 remaining assets to be sold, and they're valued at 61.5 million as at the end of July. This consists of 4 assets, all of which are under offer and have been under offer since the last time we met. However, the timetable for completion has been extended. This is mainly due to the number of due diligence queries that have come to light. So the timetable they're expecting the end of September, but that is it's a guesstimate. They're expecting that it might be a little bit longer than that. Generally, Lothbury provide and distribute an update on the performance and what's actually happening with the sales at the end of the month. We haven't received it as yet, so I'm suggesting if it pleases the chair that when I do get that report, I would distribute a briefing note outside this meeting to provide members with an update. Looking on to Hermes Property Funds, again, remaining on page 26, 5.22, the merger has been completed, and the merger was with L&G Assurance Pensions. At that point, TMBC disinvested. That was the 14th of August. We have received payments, and the payment we received on the 20th of August was for £908,350. This is in settlement of the shares. Our initial investment was £1 million, and this is giving rise to a loss of £91,000. Now, members may recall that there was a reserve fund set up for property funds and multi-asset funds, specifically for any losses incurred due to any long and medium-term investments in the event of such circumstances which are beyond our control. So we are not choosing to move out. The third investment fund that I wanted to bring up is CCLA. For members in the chamber, I've actually provided and updated some slides for you to have a look at. This is actually, they're still seeking approval from the FCA to be acquired by Jupiter Investment Management Group, and this will be creating a new partnership. The reason CCLA sought this out is to allow them to continue to serve the sector such as ourselves, while retaining its own identity and having wider access to additional resourcing and project range. Jupiter has committed to preserving CCLA's identity, investment philosophy, client service model, as well as the stewardship activities and ethical investment approach. The commitment is underpinned by a formal agreement and will remain in place for 25 years. Medium-term investments are outlined on 5.27. Multi-asset funds that we have generated income of 56,830 at the end of July, and this falls in line with the original budget and provides the annualised return of 4%. In section 9, we've done a review of the risk parameters and the strategy, treasury management strategy. A mid-year review was completed and consideration had been given to the recommendations from internal audit to reflect a more formal approach to ESG and ethical. The change has been set out in items 9.2 on page 28, and members in the chamber will have a revised copy of Appendix 5, the last 3 paragraphs outlining what we're looking to do with ethical investments. As you know, most of our investments do follow ESG, and what we're trying to do is put an additional layer in to ensure that, as well as ESG, we look at sustainable deposits. So that would be a secondary layer, but primarily we will always follow security, liquidity and yield. I can confirm Treasury activities have complied with the Treasury limits and the prudential indicators for 25-26, and there are no breaches to report to members. The recommendations can be found and are set out in 3.1 of the report. Thank you. I would be happy to answer any questions members may have.
Thank you, Donna. Does anyone have any questions at all? James.
Yes, just on the Loughborough stuff. We know that you said the total outstanding in the fund is 61.5 million. What does that mean? The estimated value for that we should be recovering from that is?
Very good question. And what I would like to do is, I don't want to guess a figure and provide a figure. We do have 0.17% of the shares. So I could provide a figure for you, but there are other elements. So it's not just about selling the assets. It's about the winding up of the group as well. So where we could say, provide a figure, when the wind up of the sets happen and the group happen, that might be significantly less, or it could be more, depending on how much cash we're actually holding.
Anyone else at all?
One other question.
Yeah, sure. Yeah,
if that's okay. What are we doing with the property funds? Are we now going to hold what we've got out of those in cash, or are we looking for alternative investment?
We will always look for alternative investments, but it's got to fall in line with our capital programmes and the money that we actually have in the reserves that we're using. So depending on the profile of how much we're spending on certain projects that members are aware of, it will determine whether we actually keep it short term, but we don't envisage that we put it out any more than 12 months out.
Thank you. Any further questions? No.
Say, Chair, that we're fortunate to have this cash in a sense because of where the bank rate's been. Disappointing for mortgages, but an entity are reaping the reward.
Absolutely. I think we certainly have benefited during this period. Great. Well, thanks very much. Move to the recommendations then. I'll just read them out for YouTube viewers. Members are asked to recommend that Council endorse the action taken by officers in respect to the Treasury management activity for April to July 2025. Endorse the inclusion of ethical investments to the existing parameters intended to limit the Council's exposure to investment risks as per paragraph 9.2. And note the current position in respect to the Loughborough and Hermes property investment funds. Can I have your agreement? Thank you. On to item 7, and that's the annual audit report, 2024-25. And I think Paul is going to.
Thank you, Chairman. In addition to the audit of the statement of accounts, which is later on this agenda, our auditors also carry out a review of the council's effectiveness, economy and efficiencies through a value for money report. Before I hand over to Lucy Nutley from Grant Thornton, I'd like to draw the committee's attention to the key recommendation that was outstanding from the 23-24 report. That mainly concerned our procurement ability within the council, and I'm happy to say that the movement that's taken place over the last year has meant that this action recommendation has been completed with no further action required by GT. Only one improvement action has been given for this financial year, and that concerns the implementation of the Agile system following the internal audit review. The management team response is given on page 71 of this agenda, and we will keep members updated as we have done on the project throughout. On the other improvement recommendations from private years, either these have been closed or reclassified as insight, apart from one, which is the review of reserves. Members may be aware or may not be aware, I have actually got that on my list as part of my annual service delivery plan, and will be coming to members with an outcome of that review later on this year. I'll now hand over to Lucy to add any further detail that she may want before taking any questions, and then ask members to consider the recommendations shown on page 45 of the agenda. Thank you.
Lucy.
Thank you, Paul. Oh, thank you, Chair. Thank you. I'm delighted to be with you this evening to present our auditor's annual report for 2024-25. Sophia, the key audit partner for Tonbridge and Malling, has a clash of committees this evening, so you have me as a substitute. So I would advise you to take comfort that you are the committee that she felt she didn't need to attend. You can be a bit smug about that. I'll take the report as read, and Paul has given an excellent summary of it, but I will stress this is a really good report in terms of outcomes, and I'm sure it'll be one of the few that we issue this year that doesn't have a significant weakness under financial sustainability. Certainly they're being issued in all of my other clients. As Paul said, we've identified one improvement recommendation this year that wasn't there in prior years. One improvement recommendation has been left open regarding potential optimism in your medium-term financial planning. And the further 2 improvement recommendations we had have gone down to insight recommendations. And from my reading of the report, I think they relate to financial planning, which you're not at that stage in the year because we're doing the audit at an earlier time than we did it in 23-24. But the timing we should be doing it in. So I don't really have much else to say, but more than happy to take any questions. I'll do my best to answer them.
Thank you. Yes, I think it was a very good report, and it's actually quite interesting to just have a look through some of the insights that have come up. For example, on local government reorganisation, page 54 of the annex. So yeah, do take a look. Okay, members, do you have any questions at all? James.
Thank you, Chair. Yeah, I mean, actually, I don't think the word smug is good enough. I think we can be a bit stronger than that. I'm very impressed with this, and I am glad that the procurement has been tightened up, and it's lovely to see no red anywhere. There's lots of nods on my right here. So yes, well done, team, I think is all we can say there.
Thank you. Anyone else still? No one online? Great. Well, thank you. Thank you. So we can move to the recommendations, which I'll read out again. We are recommended to consider and approve the auditor's annual report for 2024-25. 2, to note the comments made in respect to the key recommendations from 23-24. Note and endorse the management comments to the 2024-25 value for money recommendations raised. And finally, make any specific recommendations to Cabinet and or full council as the committee feels appropriate, considering the annual report. Can I have that by general affirmation? Great, thank you. Item 8. Sorry. Oh. Damien, sorry, carry on.
Sorry, Chair. I just wanted to, now that you've made that decision, I just wanted to take the opportunity to thank Grant Thornton for their really excellent auditing work, and our colleagues, Donna and Amanda. I've worked in a number of councils. I've never worked in a council that is so on top of its accounts and is so constantly pushing for constant improvement. I think, and I'm not absolutely sure, but I think we are the first council in Kent to have our accounts signed off, which is certainly something to be pleased about. But I wanted to also reinforce that we are definitely not being complacent. We are determined wherever we can to get better. We're always very grateful when Grant Thornton identify areas for improvement, because we always take it very seriously. And so while I think we're all really pleased with this result, for us, this is just a starting point to be even better next year. And so just thank you to everybody involved. Thank you, Chair.
Thank you, Damien. I think we would all agree with that. Right, excellent. So let's move on to item 8, and that's risk management. And again, that's Paul.
Thank you, Chairman. This report contains the strategic risk register and service risks that form part of the standard reporting to this committee, along with an update to the risk strategy and risk guidance in line with the recommendations made in the Zurich Risk Management Review a few years ago. I'd like to start with the strategic risk register. There's been no movement on the register since the last report in July, with the 3 red risks covering agile, local plan and areas identifying savings items for the funding gaps still remaining on that point. But I'd just like to give a little bit more context on those. Agile, I spoke to Eleanor, who's obviously the lead officer on this, and she's considering this to remain as a red risk, and whilst the data transfer from Agile is taking place back to Uniform. Once that data transfer has taken place, is hoping that will drop rather rapidly, because we've got more confidence actually with what's going on. I think that process was taking place over the last few weeks, and I think that was actually completed today. But as I don't have access to the Uniform system, because I don't need to have access to the Uniform system, I will check at management team tomorrow. But there should be a definitive movement on the next strategic risk register. The local plan itself, I understand members are considering Regulation 18 in the next few weeks, and that will be part of that. So I'll leave that as much as I need to say on that one. And on the identification of saving opportunities, there has been an exercise carried out by officers. I explained this at the Finance Regeneration Property Scrutiny Select Committee last week or the other week, that we have conducted a review by officers. The next stage is that I'm collating those and putting a cabinet member against those, and then we will be talking to the cabinet members on what we are likely to have a look at. There are some which are quick wins, and there's some which are slightly longer in process. So we will be having a look at those in the forthcoming months. Moving on to the risk strategy and guidance, we've now updated these through to, because the last set were written by KCC, so I've put a slightly more TNBC spin on them. So these have been updated by officers of the Risk Champions Group. So you have the Member Risk Champion Chairman. I am the Officer Risk Champion, and we have a Risk Champion team behind us that gives me support on these items. So they have agreed that we should go to the nationally recognised 5x5 matrix that is used on the National Risk Register by government and by KCC and the Kent Resilience Forum. And we've actually shared that also with the wider management team, who we did a nice little exercise with them last week, and they understand what's required of them in the forthcoming months. If agreed this evening and endorsed by Cabinet and Council, the next report to members in the January committee will be on the new format of the risk register and the new scoring. What that will mean is we will have unmitigated risk shown. So you'll see probably an awful lot of reds on there. But when we have to take the mitigation in place, that should actually bring the reds significantly down in number. And we will report to you on those mitigated risks that remain red. Because we reviewed the current structure and thought, actually, this can be a little bit confusing. So we're taking it through as a story from one start to the other. I'm happy to take any questions from members, but ask you to consider recommendations on pages 85 and 86 of your agenda. Thank you.
Thank you, Paul. Are there any questions at all? Yes, James Clokey, thanks.
Thank you. I was just going to say you noted what I noted, that there hasn't been any movement on any of the risks on the strategic risk register. I mean, we've got Agile on there, and you've noted on that, but we still have a number of other ones on there where the risk score's above our desired risk score and has been for some time. Do we have any indication when we might see movement on any of the other ones that are above risk appetite?
The savings, I'm hoping to bring something back to members in line with the budget cycle, so you'll have some sort of idea of what we've got on there. I'll also be taking into account other external factors that we've got going on, Fair Funding 2.0, which will be announced, and the waste contracts. We are aware of what's going on with that, but obviously we won't be able to do anything because the award of the contract doesn't take place till April 26. So we will have some idea of where we are with funding gap at that stage, so I'll be able to give members an update on that one. The final one, the other one, which was around the local plan, I'm afraid that's actually within the lap of the members, and I can't influence that in any shape or form. And until we've got a local plan in place, the fear is that we are going to be open to challenge on appeals, which can be sizable, but in the case of larger developments. Thank you.
Bethan.
Just a quick observation about the carbon neutral and amber risk, the aspiration for that. I just feel like we seem to get a lot of grants and keep doing a lot of work on various council buildings. I know this is not yet really started yet, but on Larkfield and things, and yet it doesn't change. When do we anticipate there being some improvement there from after all the work that seems to be always ongoing?
I think the amber risk on that is probably there more because of the fact that the government has actually pulled the plug on any grant funding, future grant funding that we could be applying for. So the concern is that actually the aspirations to achieve this are going to be rather costly. So we've left it as an amber risk on that basis. We've got a new climate change officer starting in the next few months, and they will be charged in seeing whether there is any further alternatives that we can look at. But the loss of that grant funding, because they pulled the plug and they haven't told us whether they're going to replace it. We're hoping something will come out in the fair funding review, but we can't guarantee it. And when you're talking about rather sizable sums for heat source pumps to heat buildings of the sizes we've got, it's an awful lot of money. And I suspect Damien will probably want to add to comment on that.
Damien, did you want to add something on that?
If I may, Chair. I mean, first of all, it's a target that is getting closer and closer, but the technology that we had hoped would be in place is still some distance away. In particular, it relates to moving away from fossil fuels for our fleet of vehicles, particularly our refuse vehicles, but also the vehicles involved in street cleaning and the maintenance of our parks and open spaces. But also, as Paul said, that replacement of heating systems is still very cost prohibitive, particularly for larger buildings. And so the replacement of gas boilers, which is a pretty fundamental step towards being carbon neutral, we're not quite there yet, but they're definitely things that we remain committed to and are watching the market closely to make sure that we respond as soon as the technology reaches the point around reliability and cost for us to be hopefully one of the early adopters. Thank you.
Thank you. Any further questions? No? So we can move to the recommendation, which is on page 85, and it is us to note the updates to the strategic risk register since the last iteration, with particular emphasis on those risks categorised as red, as shown in Annexes 1 and 1A. Note the service risks identified in Annex 2. And review the risk management strategy and accompanying risk management guidance, subject to any amendments required, recommend to the Cabinet its adoption by full council. Can I have that by general assent, please? Thank you, that was agreed. So, moving on to item 9, and that's the internal audit and counter fraud Q1 progress report. And Karen Herbert will lead on that one initially.
Thank you, Chair, and good evening, everyone. The internal audit report, starting on page 125 of your packs, is a progress report detailing work completed since the last committee in July. It also presents a further 8 audits for inclusion in the 2025-26 audit plan. I will take the report as read, but I wish to draw your attention to some of the key messages. There have been 5 audits completed to draft or final report stage. This does include the 2 remaining audits from the 2024-25 plan, which at the time of last committee were in field work. Both of those audits, being digital strategies and automation and facilities management, both were awarded an opinion of substantial with good prospects for improvement. The other 3 audits completed in the period are parking enforcement and starters, movers and leavers. Both were awarded opinions of adequate with good prospects for improvement. And we also undertook a review of the administration of the UK Shared Prosperity and Rural Prosperity Funds. And that audit received an opinion of substantial with very good prospects for improvement. Additional work has also been undertaken in certifying the Home Upgrade Scheme grant expenditure. And work has also continued in the background to embed the new process for following up of agreed management actions for audits. Appendix B of our report on page 146 details progress against the previously agreed audits for 2025-26. And at the current time, 2 audits from that plan are in field work and 4 in planning. The audit of the local plan is currently on hold, which has been discussed already in this committee this evening. As soon as we have some member agreement of a local plan, we'll be able to proceed with that particular audit. There's also an audit that has been placed on hold, which is the oversight, internal audit oversight of the progression of the castle project, and the recommendations and decisions regarding the future use of the gateway space. Now that the banking hub are in that gateway space, there's a less immediate requirement for development of any of the further proposals to generate income. And actually the internal audit budget that was allocated to that can be better used with the higher risk projects, things like the Angel Centre, the Town Centre review, the waste contract reprocurement and items such as that. So that budget is being transferred to that for now. With regards to resources, the new audit manager who was recruited to replace Richard, who left in May, which seems like a long time ago, he's now joined the team. We currently have 1 auditor vacancy for which a recruitment exercise will be undertaken in due course. And the KCC head of internal audit and counter fraud has now left the service. Whilst permanent recruitment decisions are undertaken for that post, an existing KCC audit manager within the team is taking interim internal audit responsibility for 6 months, and the current KCC counter fraud manager, James, will fulfil the role of head of counter fraud, also on an interim basis for 6 months. The decision to implement these interim arrangements allow for continuity within the service, whilst we consider a longer term permanent option. But both of those positions are filled by suitably qualified people to ensure that none of the service here that we provide is impacted in any way. Work continues to prepare for the external quality assessment, which we've talked about before. It's required under the internal audit standards to happen every 5 years. We have now procured the services of an assessor to provide that for us. We're having conversations with them at the moment in terms of the format that the assessment will take and what information they're going to require from the KCC audit team. There's a lot of work happening in the background to collate all of the evidence of our conformance with the new standards, and we're expecting that assessment to take place approximately February next year. So the results from that will be fed back to the first available committee after we get the report back. Section 5 of our report provides the details of audits to be added to the 25-26 plan. Members present at this committee in April this year have previously approved 11 audits, which were prioritised and scheduled for the first 6 months of the year, with further audits to be approved at this committee. The long list of remaining potential audits that we had from the original original sessions to identify potential audits were discussed with directors as part of internal audit's 6 monthly liaison and planning meetings. Those discussions also included discussion of any new or emerging risks and horizon scanning, so that we made sure we picked up anything new that was appearing since we'd had our original discussions in January. And subsequently, a further 8 audits are now proposed to be added to the plan for 25-26. The complete list of audits, so that's those already approved and those that we're seeking approval this evening, is designed to provide reasonable assurance against the key risks facing the council and to provide coverage against what we refer to as the 8 core pillars of organisational health. So members are asked to approve these additional proposed audits this evening. And then finally, I'd like to finish with the news that the Counter Fraud team have been shortlisted for a CIPFA Public Finance Award in the category of Outstanding Fraud Prevention, Detection and Recovery. This is in respect of the work done by the team in developing counter-fraud cultures with our clients and within KCC. The team are obviously very pleased to have been shortlisted and have their work acknowledged by CIPFA, and we'll find out in November whether they've been successful in winning that. Thank you very much, and I'm happy to take any questions.
Yeah, Tim Bishop.
On the parking enforcement page, table 2, but draft report is down as adequate, but then prospects for improvement.
Sorry. Yes, so at the time that this report was pulled together, we were at draft report. We had already done enough work to consider our audit opinion. We were at the time awaiting responses from management to the issues that we'd raised in the report. And once we have those responses, that provides a good basis for us to identify prospects for improvement. But the prospects for improvement rating is based on a number of factors, which includes the responses to the issues or the recommendations. It includes external factors that may impact, and also our knowledge of the service and historical, how well management actions, previous ones, have been implemented as well. So that parking enforcement audit, the responses actually came back this morning, but I haven't seen them from the auditor yet. But it's likely to be good or very good prospects for improvement.
Thank you. Any further questions for Karen? No? Okay, so we'll move on to part 2, and I'll ask Kevin to lead on that one. Kevin.
Hello, Chair. Members, can you hear me? Yep, marvellous. Okay, so I'm going to take the report as read, but just want to pull out a few areas to highlight. So this is the first quarter of a report of the 25-26 financial year. The first thing I want to touch on is the National Fraud Initiative. So this is a biannual exercise, obviously as shown in the attached annexes. 38 cases have been reviewed during that first quarter, with 17 accounts being adjusted, resulting in £17,500 of increased council tax liability and a future loss provision of £5,000. So this biannual exercise will be reviewed during quarter 3 as resources concentrate on completing this annual exercise. It is noted that the annual exercise do take time to investigate and complete due to their nature, and at the time dependencies on the DWP payable benefits impacted on TNBC abilities to update accounts. The next area I wanted to touch on is the Kent Intelligence Network. SIS continues to support local authorities across Kent in preventing and detecting fraud. The key focus area for 25-26 continues to look at fraud and error within the single person discount, small business rate relief, and unrated businesses and residential premises. So far, the Q1 results have achieved single person discount reviews from full referrals with an increase of £1,255 of liability. There are 2 outstanding cases for unrated businesses, and these are sitting with the valuation office, so we're waiting what that increased liability will be. And also we've had 60 requests for debtor tracing, resulting in 36 debtors being traced to the value of £68,667 for recovery. The next area of our work is in investigations, be that bribery, fraud and corruption. And again, there's a summary of the quarter in one of the attached annexes. So in that first quarter, there have been 21 new referrals that have been received. The most reported type involves council tax reduction and DWP benefits such as housing benefits and or universal credit, total 10 referrals. In Q1, 16 referrals have been closed, 5 where errors have been identified and corrected with a recoverable value of £27,384. In Q1, there's a total of 35 cases that are currently open and live. The highest area being the housing benefits and universal credit. And just a reminder of the legal implications, obviously the council does have a duty under the section 151 of the Local Government Act 1972 to ensure that all financial irregularities are logged and looked into, and we do that service on behalf of TNBC. So thank you for your time, and happy to answer any questions.
Thank you very much, Kevin. Are there any questions at all? No, doesn't look like there is. So I think we can move straight to the recommendation. So we're asked to note that this internal audit and counter fraud progress report as a source of independent assurance regarding the risk, control and governance environment across the council, noting the outcomes from audits completed since July 2025 and the counter fraud activity for the period. And 2, consider and subject to any amendments required to approve the internal audit plan additions and amendments for the year 2025-2026. And I have that by general affirmation. That was agreed. Thank you. So moving on to item 10, and that's the audit statement of accounts 2024-25 and the audit findings report. But before we go to Amanda, I think Paul just wants to say a few words.
Thank you, Chair. Before I hand over to Amanda and Becky from Grant Thornton, I'd like to add my thanks to both the accountancy team and other officers who have been involved in both the production of the financial statements and the audit. It's never easy doing an audit, and having done it for 19 years, I can certainly say that the 2 ladies in front of me have stepped up to the mark this year in order to make sure that everything was running smoothly. As Damien has already mentioned, I understand from Amanda the account sign off, with the account sign off being tomorrow, I hope, we will be the first district in Kent to have their account signed off this year. This means that throughout COVID, we have managed to get our accounts signed off in full every year. I'll now hand over to Amanda to present the financial statements and then on to Becky.
Thank you. The report covers the conclusion of the audit of the accounts. The draft statement was presented to members back in July. Annex 1 to the report, which can be found as a supplement to this report, and I think you've all got a hard copy, is the latest version of the financial statements, where there have been some minor changes to narratives and some numerical changes to the notes to the accounts. However, there have been no changes to the 4 core financial statements. Annex 2 to the report can be found on page 165 of your agenda packs. This is the draft audit findings report that was issued by Grant Thornton. Members will note that the engagement lead anticipates being able to issue an unqualified audit opinion on the financial statements following this meeting. Page 35 of the audit finding report, which is found on page 199 in the agenda papers, gives 2 recommendations in respect of the bank reconciliation and the related party disclosures. Paragraph 5.4, page 159 of your packs, gives details of the management responses to both of these recommendations. Members can also note that 2 of the 3 prior year audit recommendations have now been removed. Annex 3 to the report, starting on page 213 of your pack, is a letter of representation, which is a declaration from the Section 151 officer and the chairman of the Audit Committee to say that no financial matters have arisen since the end of the accounting period, which could have a bearing on the long-term financial stability of the council. And I am pleased to report that there are no issues to raise. Following the publication of this agenda, Grant Thornton have requested an additional sentence to be added to the letter of representation shown in Annex 3. So the additional sentence reads the following: we have considered the impact of the equal pay claims on our financial statements. We have no knowledge of any material events or circumstances that would require additional disclosures or adjustments to be made to our financial statements related to equal pay. Please can members note this adjustment when approving the letter of representation as part of the recommendations. Members are asked to consider the recommendations in paragraph 3.1, page 157 of the agenda, and I will add the chairman's signature to the accounts and letter of representation following this meeting. I'll now hand over to Becky from Grant Thornton to provide an audit update.
Thank you, Amanda. Thanks, Chair. I think I will just like to start maybe copying some words from what Paul has mentioned earlier on. We are really pleased that we could present our audit findings report at this point. This is well under normal circumstances, and we hardly see it nowadays across the country. And I mean, I think I can add, Paul, that from our knowledge, from our side, this could be the second job across the jobs that GT audits across the country. So we're only aware of only one other job that has signed across the country under GT at this stage. So it could be the second one if we get that through tomorrow morning. If I can just get through highlighting some of the aspects of the report, Chair, we had noted earlier on in terms of one of the significant areas of the audit. I think we've covered these areas between page 177 to page 183 of the PEC, the pension fund liability valuation. So that work was still ongoing when we shared this report, but that work now has been completed with the IAS 19 assurance letter being received from the Kent Pension Fund. So we have been able to close that work. There have been no other material items outstanding there or being reported within that area of audit risks. I think I want to jump to page 199 to 200 of the PEC, which still speaks to two items that Amanda highlighted. I think we are pleased as well that we've seen our recommendations from the previous year being closed, and the ones that are still open this year, we've been engaging with management, and these are in progress. And the fixed asset register one, it's one that takes a bit of some time, but we are satisfied that management is working on all of those items. So the items that we've raised in the current year, not repeating what Amanda has highlighted, it's on the bank reconciliation. This, I just want to highlight that these were just identified with reconciling items which were trivial, but because we acknowledge the control around bank reconciliation, we've reported this in our report. But the amounts that were identified there were trivial amounts. And then in the control point in regards to the related parties, I think the one element that I want to highlight there is just in terms of our recommendation, we're trying to also focus on extending the form that is being used at the moment to declare. That form, if it could start including close family members, we think it will now start covering a bit more and assist the council in monitoring related party transactions. I want to just quickly highlight on the management representation letter, which has already been indicated here. Yes, the only bit that we've added recently and we've made inquiries with management is the equal pay claims. This is because there's quite a number of developments across the country. Councils are facing, some of them facing claims which dates back a couple of years around the equal pay. So we've made these inquiries with management, and the responses have been noted. So we've just requested this one as a specific representation from management. With regards to our audit opinion, we are planning to issue our audit opinion tomorrow, and this will be an unqualified audit opinion. So apologies. It will be an unqualified audit opinion, which is a clean opinion. And in our adjustment for audit adjustment that have been identified during the audit, you will note that there is no adjustment. And this is because there have been no changes in the general fund of the council. We've not identified any material issues that require any adjustment. So we are really pleased with the accounts that have been produced and submitted for us for audit. They've been largely supported by high quality working papers, and we've been able to access readily all the evidence that we required to complete our audit. I think I will hold the chair and allow for any questions. Thank you so much.
Thank you, Becky and Amanda. I think there's a lot of good news there, but are there any questions from members at all? Doesn't look like there is. Oh, sorry, James Clark.
Yeah, Chair, I'll make a statement. We've done it again. Here we are. It's just so wonderful. It's comforting to know that there's a really efficient team who are ahead of the game almost nationwide. I mean, this is fantastic. Becky said, you know, we're 1 or 2 in the country. Blimey, that's something to be proud of. And so I think we ought to record our grateful thanks, the whole of the team and Grant Thornton for getting this out and so expeditiously. And it's good news as far as I'm concerned. Thank you.
Yes, thank you, James. I certainly endorse that. I just noticed actually online we have Mark Hood. Mark.
Thank you very much, Chair. I've got I'd like to commend the team as well for the team of our own team at Tunbridge Moorling and the team at Grant Thornton for the work they've done on this. I've just got a question about page 71 of the annex, where it talks about the collection fund, and there's a deficit there. There seems to be quite a big jump between what we were expecting to happen and what's happened. We were expecting, according to the papers, if I'm reading right, we were expecting to see quite a significant surplus, and that's ended up being a substantial deficit. Can I just have some kind of clarification about what has gone on there? Because it just seems a little odd. I can't remember seeing anything like that in our previous accounts.
Yes, I think Paul will answer that.
Thank you, Chair. Thank you, Chair. As being the boring accountant who knows the collection fund off by heart, the deficit that occurred in 24-25 was more around issues concerning the changes to actual amounts collected and changes to a significant number of appeals that took place. We did allow for some aspects of this because we knew that we were likely to have lower amounts billed to authorities where they've received refunds through rating valuations, and we adjust for that within there. So it was kind of expected because we did produce a deficit at the estimate stage for this, which we have forming part of the budget process for 25-26. So there was an expectation we would be in deficit. It does vary from year to year, and it depends on collection rates that we've got going on, whether there is appeals that have been significantly affected, and similarly whether there is actually a need for the increase in appeals provision. I think councillors are very much aware that the cost of living crisis has started to bite slightly on certain aspects. And similarly, there were some significant delays from the valuation office on some of the valuations that have taken place on business rates, to the point that we are waiting for, it can take up to 18 months to actually get a more complicated property valued compared to the normal time. So it wasn't really much of a surprise to myself that we were in a deficit position, primarily because we were in a surplus at the beginning of the financial year as well, which we are required to pay out to the billing authorities. So last year, so at the end of 23-24, we had a £4 million surplus in total. We're required to actually issue that out the following financial year. So there was a large amount being issued out, hence the deficit for the year. The idea is that the bottom line, the balance carry forward, should be virtually break even. It's £1 million, but when you consider we collect nearly £200 million worth of income from ratepayers and council taxpayers, I'm willing to accept that's a reasonable degree of accuracy on that one. Thank you.
Thank you. Thanks very much for that.
Okay, thank you. Any further questions at all? No. Okay, good. We can move on to the recommendation on page 157, and members are recommended to, once fully agreed, receive and approve the audited set of accounts for 2024-25 and ask that the chairman sign the accounts in the appropriate place. Approve the audit findings report contained at Annex 2 and the management responses as detailed in paragraphs 5.4 and 5.5 on the outcome of the audit, the statement of accounts for 2024-25. And finally, approve the letter of representation for signature by the chairman and the head of finance, section 151, when Grant Thornton issue their opinion. Can I have that by general affirmation, please? That was agreed. Thank you. Right. Item 11, there's no urgent items. So item 12, exclusion of press and public. Can we exclude the press and public from the remainder of the meeting as the next item contains some exempt information? Can I have a seconder for that, please? Yeah, thank you. And that's James Clokey. So can we sure.